As we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets. I haven't been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone.
Ah.
You know,
But isn't that a good thing though? Because you have more liquidity.
No, it's a very good thing.
Yeah.
It's a very good thing. And you know, and the fractional shares is given access to markets.
Welcome everyone to the Kendall Report. Sorry about yesterday. Things happen. Life is dynamic, to say the least. So let's get into today's action. I mean, it looked like last night I put a tweet out. I thought we would do kind of an S1, R2. That's not what happened at all. Pressure came back into the markets again today. Heavy selling. But if you notice something's happened twice in the last couple sessions now. We traded down in the 44 handle. We did finish there last night, but not last night, but today earlier. But the point is, it doesn't like to stay under there. And I still think the downward risk is around the 44 and a half level, 44.50. We'll go into that a little bit more, but there is some further weakness being projected here. So I'll go through that, all the details here in a minute. Not a lot of notes. I actually was having some. The reason why I'm late, not that you care, but maybe you do. Just had all kinds of issues with the technology here. I don't know why. I shut down everything, bring it back up. It doesn't come back like it's supposed to. So I had a lot of broken things to fix. So I apologize for being late. But look at a couple things that happened. I know there were some concerns, and I've been famous for saying that we're one bad auction away from a disaster in the markets, and we really saw a 10-year auction today. I believe it was around 32 billion of 10-year, and there was a 2.6 coverage. Typically 2.7 plus is a good auction. So this was a soft auction, to say the least. And you know, so I would not qualify it as a bad auction. I don't think that's the some of the impetus that we're seeing and some of the selling coming in. But that close that we watched today, that was ugly. The last 15-20 minutes was just massive selling coming. And it was, nobody wanted to hold anything overnight. And we're seeing a little bit of a rebound right now. And it was interesting though. Those of you, if you've got the indicators, if you don't, you should have them. But the hourly chart is deadly. I'm going to do my best to potentially do a live stream on Friday and show you how to use these things. Hopefully we'll get some good setups. But that 3-hour rally that we got was perfectly projected off of the hourly. And it was just absolutely amazing. And that was pretty much rip your face off rally. We traded from the 44.70s all the way up to 40. I think we printed 45.17. So that was almost a better part of a 45 plus handle rally. That was pretty impressive. And then to sell it off and almost take it all back at the end. Those things were indicated as well. So anyway. I think what we're seeing, this volatility that we're seeing is really a lot of the uncertainty that's coming into the markets all of a sudden. We have Apple starting to get hit, and I missed an opportunity the other day, and I'll try not to do this. The next time that I have like a short, the other day, I think the stream was like 30 minutes. We were in and out of there. I wish I would have. I was talking to an associate. I wish I would have covered some stocks and did some other things that fill the other half hour when those things are out there. So if I tell you it's not a popcorn night, then make sure you let me know and remind me and say, hey, how about looking at some stocks or going into some other things that maybe even interact with you folks a little bit. But I guess overall, I mean, we're finally there, folks. We're coming into CPI. I titled this CPI to surprise the markets. How is it going to surprise the markets? My feeling is that you're looking at the Fed funds now telling you that 85% probability they're not going to raise in September. I'm still going with they're going to raise. Okay, this is going to happen. And if they don't raise, then everybody's going to say, oh, they're on every other meeting. I believe they're going to raise. It's very possible. Just looking at the algos as being predicted, it looks like there's a couple more days of weakness coming in here. I thought we were going to hold the 40-day moving average. That weekly still kind of in this range. I'll bring that up here in a few minutes just so we can talk about it. But basically, it looks like there's maybe some upside surprise. Maybe the CPI is expected to come in at 0.2. Just a couple of days ago, everybody was at 0.3. Okay, so everybody's moderating down to 0.2. I'm not sure why, but that number maybe comes back in at 0.3. I don't expect a huge surprise there, but I don't expect the cooling off to start just yet. It would be awful easy if that were the case. And I just don't see that being part of what we've got going on here. So like I said, don't have a lot of notes, so just get into the database is actually reflecting this weakness. I suspect after today we'll see even more selling. Those of you who have Wave Tech, I saw one of the Smurfs. I believe I didn't see if he was around, but Bo actually posted the results from Wave Tech. I'm not going to have a lot of space this evening. Got a lot of things going on around here. So anyway, I'll just tell you that. I suspect that we'll see us get well under 40%. So let's go ahead and get in the database and go into some of these technical details. It's starting to get a little bit sketchy as we start to look forward here a little bit. So here we are at 40.80. And yesterday, the numbers that we had was, I mentioned these last night, they're about just about 1,200 sells, only about 220 buys. And this is starting to get, you can see over on the right here where it says sentiment is negative. So we had both negative rotations on both models from that standpoint. We're just, I think this is going to be another negative day. When we get the results, we're going to see even more selling. So we're starting to see the short-term rollover. And as I mentioned on Friday,
We did not see the intermediate really do much of anything. Possibly we'll start to see the intermediate start to roll here a little bit, but I don't expect that's going to get too awfully negative. I think we'll find some support from the standpoint of the intermediate levels here. I don't think this is the big rollover, but it certainly can develop into that. Typically what happens, the short-term database starts to come into another zone. I'm going to try something here and see if this works. Let me just see. It actually does. So this is a different camera view because I always like to talk to you folks when I'm looking at these numbers. So just as far as the database goes, I think we could see, I don't think we get into full liquidation mode. I think we get into possibly getting into maybe the low 30 percentile range where 40, maybe 32, 28 is a next really critical number. If it drops below 28% on the daily, then we're getting into full liquidation mode, which tells us there is a much bigger correction and a more elongated pattern that's likely to unfold. So as we're coming into mid-August here, almost anyway, as we come into that, it looks like maybe there's a rotation and we could end up going 6 weeks into a very choppy range. Most likely those 46 handle numbers are significant. There's still going to be some decent, I think, rotation going on in some of these stocks, and we'll see if we can get any sort of, I guess, rotation back in. So we're going to have to rebuild Humpty Dumpty here. So the database, if it gets down into that 28 handle, there's two numbers on the short-term database to watch for, 28 and then the 22%. And 22 is definitely a confirmation of a full liquidation mode from that standpoint. So just know that we're still looking at, this is the daily models. If we look at the sectors, though, I just want to bring this up while I have it on screen here, is the sectors are, most of them are transportation, utilities, and services are flat, but all the others are still long in the system. But basic materials, this is something I was looking at, basic materials, capital goods, they are hitting their mean holding, meaning that is the average holding that they do, they've hit that. And you can see even basic materials, if you look in the far right here, it says it's went to a hold. So the bottom line is we're getting some of these patterns are starting to get stretched out. So what we'll see next after the liquidation, we may start to see this on tonight's run. We may start to see some of these sector indexes and the groups also start to go, because right now let me just scroll up just a little bit here. There's 62 of the groups are still long, and I normally don't show you this, but if I go over to the groups, you can see all the individual groups of stocks that are still long, and most of them are in the green. I'm looking here, there's only four of the 62 sectors are in red. So that means that if you went through in your WaveTech and you go through each one of these on a daily, you can drill into these. There are some flats, but of everything that's long, there's only 4 negative sectors, which tells you there's been a lot of positive rotation. So I've said this before, a lot of this stuff where people are telling you there's 7 stocks driving the market, total BS. I'm just telling you, those are, anyway, that's just a good headline, okay? That's a good clickbait headline, and they've played off of that all the time. It's just like, folks are still talking about Fitch. I mean, who cares about Fitch? I mean, they're basically nobody. They grab the headlines on downgrading the U.S. debt, and then, of course, we got the banks coming in with the the Moody's downgrade. So I'm still think this is an ego trip with these people. They didn't mention anything that we didn't already know, but maybe more on that later. But the bottom line is these sectors on a short-term basis, these are the groups. These are the subgroups, the groups within the sectors that are really pretty positive here. Because, like I said, there's right now 9 sectors long, and all of the sectors that have been long for the last 15 to 63 days is the longest here, have been positive. There's been those of you using WaveTech, you should be able to crank some pretty good money on some of your portfolios. There's been a lot of stocks participating, and so anyway, enough on that. But that rotation, what we'll be watching for is deterioration here, both on the groups and the sectors. That would be the second phase, and like I said, we may start to see some of that, and I'll try to bring that up tomorrow. I wish we were doing the stream when I normally did it in the past, which is, when I had the results. I always waited every night to do the stream so I had these results, but it just doesn't work in life right now. So we'll just keep doing it like we've been doing. So, all right, so let's move on. Let's go into the technicals here. All right, let me adjust a couple things. So this 3-hour rally here, I'm going to do just a quick little review of what I was seeing today to identify this rally. But if you watch, I don't have, right now the algos are suggesting that we're going to rally up. We've had the last 2 hours that we've had, it was a partial hour before the markets closed and reopened, but we should see a challenge of the 10-period moving average here, which is right now 40, let me get the number, 4,500 even, and then the next level will be the 21, and the 10, 45.14, 45.12, and I'm telling you, we had a similar thing, by the way. I have, I wouldn't say a photographic memory, but I do have this memory where I can see these patterns repeating, and maybe that's from days of standing in the floor before computers. But the pattern that has set up, we did the same thing at the 46 handle, around 46.14. We kept going 46.14 up to 20, and ultimately it failed off of there. And we're doing the same thing here on 14 on the 45 handle. I want you to notice something, though. There are 3 Fibonacci targets that have come in on the hourly. Now, it suggests that we are going to retest the 45.30 level, which was the overnight high. And so we could see that. Let me just tighten this up a little bit so we can get a better view. But right now, those fib targets are at the moment 45.32, 45.53, 45.66. So the hourly suggesting that we are going to stabilize as we come into London. We should maybe see a little selling, and the whole selling mass thing happened last night in London. I'm sorry I wasn't here to set that up for you, because there was a pretty good setup overnight. So yeah, I see people talking about gaps being filled. Too much Edwards and McGee for you. There are gaps on charts that have never been filled. So but it's wishful thinking. Maybe that'll be the case. We'll see. But the bottom line is these things should start to go up and move back into these averages. So look for 45.14, 45.30. Let's go over to the daily and look at the market grid here. And the ranges that are being projected here, let me just go to, let's just go to yesterday's, and we did see 45.31, and the high was 45.36. So we traded just above R1, and then we went all the way down to an R3, I believe. Let me just get this number up here so we can see it. Yeah, so 44.75 was R3, S3, I'm sorry, S3, and we traded down here to 78. So it's pretty close to a R1 S3. But we also have something else here. If you see these, I'm going to try to blow this up so you can see it, but there's red dots through right here, and that is a pivot, 44.94. We closed below that pivot on the daily yesterday. That's a bit negative. It looks like we have one more day down and then a turnaround potentially coming on the future. So maybe whatever I'm just looking here. Yeah, Friday should be, between Friday and Monday, we should start to see this thing turn around. But if we look at the algos and the WaveTech ARs, the projected moving averages, we're resuming this trend to the upside. I mentioned I will go to the weekly. Let me go over there so you can see what's going on here. We're trading right on that weekly pattern. Now, if we start to break through this weekly 10-period moving average, that's 44.81. So we basically are bouncing off of that level. We printed 75 so far. 75.25 is the low. This is the futures. And it's flatlining. The absolute extreme, if we went out, would be down into a 43 handle. Let me just get where we are right now and give you it's 43.13 this week, and it's going up right now about 26 handles per week. So that's going to put us up and around 43.40. It'd be about another 120 points from where 130 points from where we've finished here. It's possible to go into that level, but I would also look at just the levels on the weekly charts here that are going to be significant. And that would be, if you notice S1, look at this, 44.75.19 is S1 weekly. So that's got the potential, and I mentioned these numbers the other night, 49, 44, 49, 49, 24, S2 and S3 weekly. And we also have the moving average right here at 44.81. So this, you may have been looking at the lows being printed today down at that 75 number. So it's going to be interesting to see what happens. I think we'd have to close, I'm just trying to get a number here for you. We'd probably have to close over 45.30 plus. I'll try to zero in on this number tomorrow, but we're probably likely to, if we get a close over 45.30, then that's going to be enough to save the market. But let's just go a little deeper here for a minute. As if we look at the algos, they are suggesting that all the way, and I've talked about this several weeks ago, that the algos were suggesting that we're going to potentially be in a decline into the third week of August. So this is week 2. That would put us into next week. And then we're not really looking at any turnaround until sometime into September is a possibility. So this is where I'm coming up, where we could print down to that 21-week moving average. That's at 43.44 level. We'll just call it 43.40 would be that level. And I don't see this getting there, but that number is in play right now with the way the markets are setting up. So the next couple of days are going to give us a whole lot of insight. On Sunday night, I should be able to zero in on this thing pretty good. All right, I'll just stay here with the weekly NASDAQ. Weekly NASDAQ, right now we're trading below the 10-week moving average. That thing was driving. If you recall, if we go back into May and June, I was talking about that angle of attack and that it was going to start to roll over about now, which it is. The algos actually projected the general pattern really well. So if you have these indicators, what you'll see here is you'll start to see that things are being projected to flatten out in the days or weeks or the periods ahead, even if it's intraday. And I'm fixated right now on this 5-second S&P chart that I use for day trading. It's absolutely insane and giving you some really good lead on things. So I've got to figure out how I'm going to record a trading session like I used to do in the old live room and try to show you folks how to use this thing. But what it does is it teaches you how the algos are adjusting and what they're telling you. Now I have this thing set. I used to set it for only 5 bars out or 10 bars in the future. I've now got it set for 150. And what's interesting is it looks like somewhere as we come into March of 24 is where at least the projected levels are going to peak out. But so it's gonna be interesting. There's a rule I will share with you that way back when we're going back to 1984. That's so funny that number was where I was doing a lot of significant research. And one of the rules of patterns that we discovered way back when was when the market's going up like this and it extends, and we got into extension mode as far as the probabilities go. I'm not going to do a master class right now, but I do want you to understand this one thing. Typically what happens is the first bounce off the 21 period moving average, it goes to a new high of the previous pattern. Not necessarily an all-time new high, but actually, so that would suggest like this is going up about 26 handles per week right now. If that maintains, it looks like it's going to soften a little bit, then accelerate down the road. You can see the flatness of this 10, but on the 21, it's really staying at a nice steady where we're seeing the spreads between the 10 and 21s at least being projected to get closer together, and the differential coming close but not crossing over. So what I'm expecting here is that angle. If we happen to see anything down toward that level, now I said it was going up 25 handles, and that was the S&P number. Let's get this number here for the NASDAQ. NASDAQ is 90 handles per week. So that number is going to be right now at 14,365. So, and nothing flat, it'll be 15.5 in a matter of just a few weeks. So look for us to get down into that level. Let me make sure I'm looking at the right number. 14, yeah, we're looking at 14,365. I'm giving you the wrong number. I was looking at the 10. The number is, yeah, no, that's the right number. It's actually 115 per week. So that angle here is 115 handles per week. So that number is going to start coming up, and that will be where the moving average and the price will meet. When it gets there, that's going to be a buying opportunity to test and to most likely take out the high. I'm just getting you some numbers here. So get your pencils out. The high of on the 17th of July at 16,062. So that's going to be the mark. So if we get down to that 21, or if we go sideways into it. Doesn't matter how we get there. If the market consolidates, that moving average comes up underneath it, then that will be the point where you want to watch for this, for a significant rally to test these highs. Okay, so we'll leave it at that. Let's go to the daily chart here. And just like with the S&P, it looks like we've got 2 more sessions with pressure down, and we do have some fib targets underneath the NASDAQ right now. You folks make my job really easy if you get these indicators, because you'll have all these numbers on your desktop and it'll be easier on you. 15,338, 15,116, 14,980. Those are the targets. And if we just look at the market grid here for today, we're looking at the extreme 14,935. So it puts us down into toward that PPM2 number. I'm sorry, the Fibonacci 2 number that's being forecasted there. So just make sure you pay attention to those numbers, because we're likely to see some sort of bounce, but it looks like that we've got, 2 days, CPI, PPI, that we could see some pressure and continuation of this. So that's the pattern. Hey, listen, in the middle of this thing, I'm going to throw something out. We've got a couple hundred people watching. If you would be interested in doing like a live conference, like via Zoom or some kind of platform that wouldn't have a leg, if you'd be interested in doing that, let me know. There would be some kind of charge for it, but it would be something I'd be willing to do if you folks are interested. We get enough interest, maybe we'll send out a survey to everybody that bought indicators or something like that. But I've been really chomping at the bit to get in front and to be able to interact with you folks. And I'm still trying to figure out how to do, I'm still kicking around doing a conference in Vegas as well. I'm just trying to get somewhere open in life, because I've got an overseas trip coming up here in about 6 weeks. So I just got a lot going on, folks. So, but I really want to do this. So, but if, let me know. It wouldn't be any extravagant cost, but enough to make it. I always say you got to have some skin in the game. People act differently when they, free is free. When you pay for something, you pay more attention. At least that's been my experience. All right, so moving on. Let's go ahead and let's get to the Russell. All right, so Russell is already to the 40 on the daily. It's holding it, so which is interesting, but it does look like all of these indexes, they all look like they have several more days of selling pressure to come in. And like I said, I expect the database to go on. And yes, I am working on a London trip, so I will let you know when that's happening. Somebody's asking. But the bottom line is, well, we're holding right on that line, but it does look like we've got way more pressure coming in. And I think all of the intermediate charts are going to come into play, these weekly values. The 10 is being challenged on these right now. Let me just bring that up so you can see it. Yeah, we're fairly close to the 10-period moving average here. On this one is 1919. We're trading 1941. So that's the number I've been talking about. We did hit the first fib target on the upside that was being calculated going back to May 30th. It was suggesting we would go to high target 1, 1994, and we printed just above that number. There's still valid fib targets up here at 2103, 2170. So these are still a real thing. And really, if you look here, I'm moving my cursor around, but this has really just been this zigzag, double zigzag type formation. And we're still trying to figure out whether we can break out or not. And unfortunately, I have to change the settings for this chart to work appropriately. Let me just do something real quick. Let's put the cash up here. Yeah, there we go. Let's just put the cash up on the Russell for a minute here. As you can see, the algos are still, they're much different position. And if you notice, the Russell is slightly outperforming right now from the other indexes. The NASDAQ was down, I think, 1.17 today, and Russell down 0.86. So there's a slight overperformance yet. And that would be the case. And, where we start to see this continuing, this has a slightly better upward slope than the others. In a minute, we're going to get into the Treasuries. And I've been talking about how the 2-year and the 10-year have different slopes, which is telling us about the configuration and some of these pairs that are going on out there. So you can get a pretty good feeling for how these things are setting up. But this has a much more positive tone, and we're a little ways above that 10-period moving average. 1907, I mentioned 1921 on the daily. So 1921, 1907, there's pretty good support. I'm still expecting that these indexes will hold in this pattern. I don't see us rolling all the way back into the lower parts of this, but if you look at some of the values here, if we go out into September, they are getting negative. So, it's possible that we get a bigger rollover here, and the keys will be what I told you about when we're going to the database, whether we start to get a negative rotation in the sectors on the short term, and then what type of action we start to see in the intermediate models as well, which I'll cover that on Sunday evenings. All right, so let's get into Treasuries. One of the things that, if you recall, that I had talked about before, see if this will work. That's the wrong one. Yeah, one of the things that I had talked to you folks about before is that what we need to watch is how the Treasury starts to restructure the offerings that are coming out from as they start to restructure the financing. So they did a bunch of short-term money, T-bills, 1 year. They loaded up the front end to get the Treasury coffers back filled again. And now what they're going to do is start that refinancing part. And we started to see that today with that $32 billion of 10-year. They got a lot of money they got to raise, folks. This thing is really getting big, and I don't think it's that timely. I really don't think there's big issues with the debt, but I will stick to the story that we're one bad auction away from a disaster. So if we get an auction that there's not good coverage, let's say it's under 2 to 1, that would be really bad, especially on the back end of the curve. That would definitely get the bond vigilantes to show up, and they would be looking to hammer these interest rates. And if that's the case, then that's, like I've been telling you just on the chart that I have here right now, is we still have this upward slope all the way into late September, and then it starts to flatten off a little bit. Let's go over to the 2-year. Look at the 2-year, how now this is fantasy right now, right? But this is, the algos are suggesting flat, and then as we come into next year into an election, right, is showing a drop in yields. I'm going to do what I did the last couple of times. let's go back to the 10-year real quick. The 10-year is staying higher, but it's being forecast, for what it's worth. This is December of 24. It's being forecast to be in the 2 handle, 2.9%. So it'll be interesting to see what causes that. And I also think there's something else that will happen. I'm just going to come back up for a second here. Yeah, so I think the other thing that could happen is at some stage you're going to stop the QT. I saw somebody mention the QT is ongoing. They've been selling stuff, but I believe that the bottom of where they're going to stop is going to be where they think, what monies they think they have to have on to support the economy. The economy is not a $900 billion Federal Reserve balance sheet economy anymore. The economy is growing substantially. So you're not going to get something where we're going to go back to those levels. Maybe I've been targeting about 5.5 trillion, maybe getting down to there. Could be 6. I think we're in a 7 handle right now, starting to get into the 6s. At some stage, you're going to stop doing QT. And when that happens, guess what? The selling pressure in the bond market will tail off. And maybe that's what this is projecting. These numbers are going to change substantially depending on what happens. Yeah, we'll watch this forecast, but I want you to see that. All right, moving on. Let's go to crude. All right, so crude continues to climb. I've been talking about this rally. We are getting close to that. I think we might have printed, let me look at something here. We printed 84.65. I was telling you that the key level is going to be that 85 handle. If we get above that, and we're going to see an acceleration to about 87, maybe $90. And listen, so much for Bidenomics, but these guys have absolutely sold out the entire SPR. There's no way they're going to save their asses this time. They're going to pay, and I guess we're just going to be at risk. I think we're down to around 16 days is all. And I think at the peak, maybe we were 60. I mean, there's not a lot there. The only thing that all of a sudden you're hearing is they want oil production to come up, and oil production has come up a little bit, but there's all kinds of disruptions. All of a sudden, we see Russia make a move in the Ukraine, and all of a sudden the dynamics change to basically moving around and seeing maybe a squeeze in the oil market. Plus, Saudi and all these guys, they're going to squeeze the market big time here. I think they're not friends of anyone here. As you know, the BRICS currency deal is still out there. There's plenty of things to go. Yeah, and you're probably right. They will pay top dollar to replenish this thing. I mean, I was going to give them major kudos when we went into the 60 handle, if they would have started at least trying to replenish, but they were still selling down in the hole. And it was just classic. I was going to be really impressed if they actually were a buyer down there. And now, if they come in as a buyer, that would just really disrupt things. Once again, though, listen, these forecasts may be completely bogus because they're way out in the future, right? So if I come over here and I'm going out to, June of next year, is this a good forecast? I don't know. But if we just look at what's being forecasted here, all of these markets, the interest rates, I probably should maybe, if you remind me, I'll try to cover the Dow tomorrow. I'll try to cover the Dow tomorrow. Hang on with me 1 second. I'm getting spam on Skype. I apologize for that. Anyway, all of these markets are showing a dip coming into next year. All of a sudden, everything's going to get better. How is that better? Meaning prices lower? Is there going to be, there's folks talking about a deflationary type scenario. Everybody's got a story. I'm just going to read the tea leaves as they're presented to me. And right now, we're seeing higher prices right into September, October, and then maybe a stabilization. But we should see, just like we saw with the NASDAQ, that angle of attack is pretty substantial. And bear with me 1 second here. I just want to bring something up here real quick. I'm going to bring up this. This is the PPMs. A couple little minutes of education here. But what we're seeing here on the PPMs, I'm going to flash back and forth here. What we're seeing in this angle of attack, we're up here at 1.68. is the reading. Look at ppm 1, 1.68, ppm 2, 1.11, ppm 3, 1.4. So let's go back to this. When we get up to 1.6, we're coming into that extended, what's called the extended peak value. And when we get to that level, then that angle of attack is higher enough that we're going to most likely follow that slope that's being projected on the predictive indicators. We're going to follow that slope, because when we get to this level, it takes a lot to start to bleed off the momentum that's in this market. When momentum gets at a certain level, it gets more, best way to put it is more difficult to be able to make any big turnaround, because there's so much buying and whatever the market forces are during those type of periods that you're not able to get them. And it's most likely fundamental driven when you get to these kind of extension patterns. So when you see the PPM values getting at 1.6 and it goes much above that, then you get into the parabolic curve, and you start to see the scale on the far right is where you start to get in there. You switch over that curve, and then that's when you get these ballistic markets. Yeah, thanks for that. I have no idea why there was an echo. Oh, I bet I think I do know why there was an echo. Okay, all right. So let's go ahead and just move on back into there. Everything's fine now, though, correct? But that angle of attack is fairly substantial. So expect that to continue. And I went to, if we look at the monthly, we're actually coming into resistance on monthly. So this is going to play out, but look at monthly is still being projected into January 24 to actually start to see the moving averages turn around. So the stability in this market is going to be right around this 82.75 is going to be the bottom end. On the upside, we're probably looking at numbers around into potentially into the 90 handle again, which would be pretty amazing. It's very interesting. I did on my Substack, I did quite a bit. I have another article I'm trying to finish if I can get 10 minutes on the clock to explain the angle of attack. And there is a fair amount of that angle of attack in the indicator on the in the class and the indicators. Yeah, probably that would be the easy way out. All right. So, kind of stuck on the monthly. This is gold next, and gold we've actually hit one of the Fibonacci targets. Is 2019. We printed above there. We actually printed up to 2063. We still have two other targets up here that are still valid, and they're 2172, 2267, which would make Peter Schiff quite happy. But look at the algos. They're starting to turn down. So momentum is still there. We should be able to stay above the 10-month moving average. That value right now is 1922. I've been talking about that's a pretty significant number. 1950 to about 1920 is going to be major support. If you're in the gold, you're probably going to be able to position off of those numbers. But it doesn't look like we're just going to climb the wall of worry with the moving average ultimately getting up maybe where we're printing above 2000 again. But let's back up, come back down to earth here. The algos are suggesting we're going to see a little strength. We do have new fib targets on the weekly that have come in as well. We're looking at high target 1, 2175, 2280, 2344. But we're starting to see in the next couple weeks is what we're going to watch. Is it looks like we could get a bid in gold, which is interesting, folks, because it's setting up with some of this further selling coming in to the market. So that's going to be, I think, probably the thing that you're going to need to watch as we go forward. This may be the counter trade to some weakness in the equity markets if they continue to unfold. Looks like how they're going to with some of the weakness. All right, so we'll do Bitcoin. Still got that upward slope, just a weekly chart. Fib targets are still alive. Nothing's changed. Only thing, it looks like we get some strength coming into next week. And once again, it's going to be interesting because, Bitcoin was originally advertised as being starting to, basically been advertised as an alternative asset. Well, certainly relative to what the equity markets are looking like, that's probably the case. So this whole pattern is likely to just to continue, and we have this upward bias here. We do have, and I missed this the other night, this is the weekly. We do have some new fib targets on the downside that I need to mention here, and they are a low target 1, 25.5, which is a number that seems to always come up in the last several months as a key number. And then below that, there's two projections at 23.1 and 21.6. So I don't think that happens. It looks like we're likely to just stay in this upward slope. The worst case would be getting down to that 25.5 number. I don't see it breaking below that. But there is still a slope, and we've managed to get back above the 10. and the 10 is looking like it wants to accelerate next week.
Okay, folks, that will do it. I appreciate it. Sorry, I got a late start here. We're above our typical 1 hour stream. Just be cautious. It looks like we've got further I guess selling that likely to come in on the equities for a couple of days. Expect to see plenty of volatility. And I didn't really talk about it tonight, but on the hourly charts, watch for this volatility. As I told you, there's upward fib targets right now for around 45.33 with extreme, I think, around 45.80. So that could be a situation that happens around CPI. Maybe it comes in better or something that happens around some news. We got two big news pieces coming. So watch for those things. Algos are suggesting that we should start to move higher on the futures in the as we come into London tonight. So watch for the switches. Look at the hourly algos to see if they're pointing back down as we come into the London opener a little bit after. Anyway, folks, thanks for watching as always. Sorry about yesterday. I'll be here tomorrow, same time, same station, and we'll take a look at the database and see what kind of attrition is continuing to happen there. Have a great evening. Have a good day trading tomorrow.
Yeah, I wonder what that echo is. I'll have to check that page. I had to reset things up. Thanks, everyone. Appreciate it. I know what's causing the echo. I've already figured it out. I'll fix it. Thanks, everyone. I'm so sorry. I know exactly what happened. Anyway, thanks, folks.